All right. Can everybody hear me? Yes? So this is going to be the market update
Yeah, I can
for
hear you.
this afternoon. I'm going to see if I'm going to post any charts and so forth, but just really want to go over the market, what I'm looking at, how I'm looking at the market. You guys could take notes of this. Well, I'm going to post the video later, so you don't really have to write any notes. But what I'm looking for right now, let me just turn off the indicator. I'm going to make the charts very clear so that you have an understanding how I look at charts and what I'm looking for. So this is an indicator, which is mine. I'm currently building the other one. X, gold. Look at that. Yesterday it puts out capitalization, which is saying we might see some upside. All right. Let's start with VIX. So you guys know I like to track VIX, what's going on, because it really tells you how institutions are positioning themselves in the market. VIX is very important, especially if you're trading options in the indexes and you're doing zero DTEs. It's even more important, more crucial. Now, one of the key levels I was looking for in VIX is this support or demand zone at the bottom here, which is in this box. Once VIX is hitting that level, you don't really want to be going long the market. That's not how you want to think of the market. Whenever VIX is at a support level, you want to be very careful going long the market because there is an inverse relationship. You guys know this already. So it's very important if you're trading zero DTEs or you're tracking the indexes. What are the indexes? They're SPY, QQQ, IWM. You want to track VIX at the same time. It gives you an edge in the market. A lot of people who trade, I don't know how people trade without VIX, or at least not looking at VIX at all, because it helps me to forecast the market. It helps me to gauge moves that might be there, whether bullish or bearish moves. So now, VIX has it came to our support level within. There's two support level. If we break this one, the other one we have at the back here was this $14 something. If you guys could see that, was 14 something at the bottom here. VIX came down here. This here is a key level because this is a big demand zone all the way to the bottom here. This is support level. So it broke this support level and the next demand level was here. So anywhere between these two support level, I was expecting some sort of bounce to happen in VIX. I don't know how big the bounce is going to be, but there was a falling wedge on VIX and is coming down into support. That's a warning sign that if you are currently long and you're over leveraged the market, that's a sign that you probably want to deleverage your position or manage your risk even more carefully. That is why I tend to look at VIX because VIX, the way VIX is priced is using options. So to think of it this way, the mechanics behind VIX is whenever you're seeing VIX at a support level, that really just tells you the overall institutions, the overall market, they're currently buying a lot of puts on the market. So when there's a lot of puts buying on the market, you tend to see VIX because of the inverse relationship. You tend to see VIX forming a support level. Whenever there is a supply zone or a resistance on VIX, that is where institutions tend to go buy a lot of options on call options in the market. So VIX is priced based on the option activities or option flow in the market. You cannot go buy VIX itself. There's no trading VIX. You can only trade VIX in terms of VIX futures or VIX options. So it's the options that is really pricing VIX. So you understand the mechanics that go behind. So whenever you're seeing this, like this bottom or a support forming again, it just means that's a place where institutions tend to come in and start buying calls or going long the market through options because it's tracking options, the volatility, the S&P 500 volatility. So when I say the market, I'm really referring to S&P 500 or SPACs. That's what I'm talking about because this is tracking the S&P 500. So now that's the mechanics behind how VIX is being priced. I'm not sure if you guys were aware of this, but it's important to understand how VIX is being priced. So you understand option activities that goes on. Now, VIX came up, it kind of filled that gap, and it's rejecting a key resistance level. What that tells me is that I could expect some downward pressure on VIX. And if there's some downward pressure in VIX, that's going to put upward pressure on the overall market. Will that happen for sure? I don't know. Nobody knows. But if you're looking at this over here, this is a distribution top on the 1 hour. If you look at it this way, this is a distribution top on the 1 hour right here. You have, I'm charting VIX right now. You pretty much have a rising wedge and you're breaking down. And then you have this resistance. So the next place VIX could come down to is closing this gap right here at 1876, or even could close this gap here at 1688. So you can see some downward pressure on VIX. Now, that's my overall thoughts on VIX because it's at a supply zone that you got to be careful with on the overall market. And it's starting to farm over here. It's starting to show some bearish signs, as you see right here. This is one of the indicators I'm using to help me understand when there's a flip, a bullish or bearish flip in the market. And right now it's starting to put out one red, which is saying you might have a bearish flip in the market. So you can see some downward pressure on VIX. And when there's a downward pressure on VIX, the overall market will pretty much rally. Now, let's start with SPY. We have a macro rising wedge on SPY. It came all the way to the top here, and it got rejected. Same thing with QQQ. You have a macro rising wedge in QQQ, came to the top of the channel like it did here, got rejected. And same thing with IWM. Rising wedge, macro rising wedge, came to the top here, got rejected like it did over here. Now, what I have noticed with the entire market is you have to take in context with the overall market. You're seeing the same price action with SPY, QQQ, and IWM at the same time. They're all doing the same thing. However, if you're to really look back, I've probably analyzed about 20 years of charts. When you look at it, the market is seeing dips being bought faster and faster. You're not getting the kind of dips that you used to have where it will just follow through. The extension of those dips are not happening, and the market just keep sucking up those dips. That is not a good thing for our generations or the following generations who's trying to buy at a discount. The overall market is so overvalued at the moment that you're not getting the opportunity that you want to go long the market at a good price. The valuation itself, fundamentally speaking, is so detrimental that at some point, I think there's going to be such a massive pullback in the market that's going to be somewhat of a 2008 or COVID correction. When that's going to happen, I have no idea. Nobody could tell when that's going to happen. But that is why I tend to use Elliott Wave, because it helps you to project, because the market is behavioral psychology. It helps me to understand that the market moves in a 5-wave move to the upside, and a 3-wave, 7-wave, or 11-wave to the downside. So that's the only way to gauge what the market is doing. This is the weekly chart. Let's where are we on? Okay, let me just move here for a minute. Let's do the monthly chart. So if you pay attention to this really fast, if you look at this here is RSI. It's pretty hot on the monthly. It's right up here on the monthly chart. So everything is pretty much hot on the market. Look at MACD on the market. This is where everybody is going long now. That is how overextended the market is. So it's like jumping into the market, and the market could go higher. This market is relentless, and the dips keep getting bought, and that is not good because the government is coming in and they're buying up the dips, and it's overvaluing the market, and they're not allowing the market to have a healthy correction overall. And at some point, I think because of AI and so forth, you're going to see a massive pullback on the overall market. That's going to see somewhat of a 2008 correction. But anyways, let's discuss what's happening now. So here you had a pullback to retest the bottom of the trend line. Over here, this here has completed an entire wave. So now we're looking at, you're correcting this wave here. And this is something I pointed out, the pivot lows and pivot highs. You need to understand pivot lows and pivot highs on a chart. So in terms of Elliott wave forecast, SPY has a pivot low, which is the bottom for this entire move after you've corrected this move here. This is the pivot high. So what SPY is currently correcting is this entire move that you see here. SPY is currently correcting this move, which is a 20% move. The market, in a wave 2, the market tends to, and this is a wave 2. The market tends to pull back to 0.5 or a 0.618. SPY has not been doing a perfect 0.5. It has not been doing it. That's what I'm saying. The market keeps getting bought up very fast, and the pullback is not being followed through how I want it to follow through. So technically speaking, the kind of pullback I would want to see for a wave 2 is a pullback to come down to this level over here and retest this breakout right over here, which is a break of structure. So I wanted to see this kind of pullback to come down here and retest this level, then continue to move to the upside. It doesn't mean we will have this because the market keeps getting bought up over and over. Now, on the weekly, there is some bearish volume coming in a weekly, but it's not enough as you see here. So I don't know how much the market will pull back, but you're currently at a support level over here. So there's two scenarios I see happen, and if you're taking a trade, this is the scenarios you need to plan for because nobody knows exactly what the market is going to do. I'm going to look at the 4-hour chart. Once a move has been completed, you will have an ABC retracement to the downside. You've had a wave A, B, and C. Now, there's two things that could happen. After you have a wave C to the downside, you could have a 7-wave move to the downside, which is called a double correction. And a double correction is when you have a WXY move to the downside because the market moves, retraces in 3 waves, 7 waves, or 11 waves to the downside. And it's important to understand this if you are looking to buy dips or you're forecasting the market. Now, this entire move here would have been a W, this was been an X, and this would have been a Y wave move. Let's go to the 4-hour chart. So how would I, now if this completes an ABC and this is WXY, where would your Y wave end? You got to take your fib extension tool, and this is education, guys, is either you pay attention to these things or you keep giving your money to the market over and over, all right? So I'm trying to teach you how I analyze the market and how the market moves. So you take your fib extension tool, which is right over here. You start from the top here. You come down to the bottom of the C wave. You go back up to the X wave. And the Y wave tends to end anywhere between fib extension 1 and fib extension 1.618, right over here. And that is why sometimes you'll see I have a blue box. And my blue blocks have to coordinate with fib extensions, the rules of Elliott wave, and it also have to coordinate with key levels as well. Because I want to make sure I'm very right with these things. So you want to look at key levels and you want to look at your fib extension. So this is where I expect SPY to come down and start moving back to the upside. It is very likely that within this, if you look carefully here, within this X wave, you have a B, and a C wave as well. Right over here. Not sure if you guys see that. So you have 2 ABC waves. So that means SPY would have completed its WXY move to the downside of 2 corrections, which means very likely SPY has bottomed here today. Right? The alternative that you can see is that you've had this ABC, but if SPY begins to break, which it did, this B wave, then it's very likely that this entire correction is over and SPY is ready to move to the upside again. And this would be, for somebody who's a long-term investor, this would be where they're going to start accumulating SPY. And now this is from an Elliott wave perspective. Now let's look at this from a volume price analysis perspective. From a volume price analysis perspective, if you look at the volume at this area stepping in here, look at buyers stepping in here. Look at the buying stepping in here. Buyers have stepped in. You got decreased volume on the selling. Buyers have stepped in again. This is on the 2 hours chart. On the 4 hours chart, you're seeing the same thing happening again. Buyers are currently stepping in at this level. So this becomes a very key level here where I would not want to short SPY at this moment. If anything, it is better off going long because this entire correction has been completed, which is a very short correction. I would have wanted to see a slightly bigger correction that comes down within this range over here, which I talked about before. This would give me a better buying opportunity if it would have come down here, but it's currently filled a gap and now it's moving back up. So I would be careful shorting SPY at the moment because you have probably bottomed here. The alternative move, there's always an alternative. The alternative move here is you can see something like this play out as well, where this was a larger ABC or WXY. And that is when you come back down to test this level here. This is the alternative move. But if you're looking to go long, this is where you go long. If you're buying SPY, you buy the 3 wave or the 7 wave move to the downside. We have a 7 wave move to the downside. And here will be the 11 wave move to the downside. This is where you buy the other one, where you're accumulating over and over. And that's how you have a plan, a trade plan that helps you to accumulate. You accumulate at the 3rd wave, the 7th wave, and the 11th wave move to the downside. So right now, because of the volume, look at the daily volume and so forth, I would caution you on shorting SPY. Now, let's remove a lot of these drawings and let's go to my indicator. Let's remove some of these things. All right. So whatever I'm talking about here will apply to QQQ. It will apply to IWM as well because they're all doing the same thing at the moment. So on my indicator that I have here, all right, you're still finding support on the EMA band, which is this green band over here. You're still finding support. So this, once price get back over here, this is not a place where you want to go short. You want to probably exit your short position and expect a bounce. And it was a key level as well. That's exactly what happened. So now, if you're long here, you wait and you keep holding your position. Because there's only 2 things that could happen. You continue to break to the upside, or you get rejected here, and you come back and you test this level here where you broke out. Nobody knows how it's going to go. We have no idea. And while that is happening, now you see this band right over here. This indicator that I have developed, it helps me to understand the state of the market from an institutional perspective. Once the EMA band and price have crossed over this indicator right here, this green line that you're seeing, and it has changed to green, that is when the market has become very bullish. The state or the regime of the market has become very bullish, where you continue to hold your position as long as you're trading above this level. And at some point, you can start taking profit. Like this X over here is telling you there's some distribution taking place here. So what I'm looking to do next, trade plan, what I'm looking to do next, I'm looking to probably start going long the market, probably with leverage ETFs on SPY, QQQ, maybe, and probably just do IWM. So the bounces, the pullbacks are getting shallower and shallower, and at some point, this is going to have to have a deep breakdown because I would rather see this gap has pretty much gotten filled. I would rather see even on QQQ a bigger pullback on QQQ, which is not it is not happening. Give me a sec. This is where I would have rather see You can see this. So this is still possible. We have SpaceX coming out tomorrow. So that's going to be crazy for the market. SpaceX is most likely going to pump. Whether or not it's going to pump test with it, I don't know. Probably it will. I'm not looking to buy SpaceX at all because a lot of times IPOs get sold off, especially the 6 months area when the lock-in period has completed and a lot of insiders start selling. So I'm looking to buy SpaceX in a couple of months, probably after 6 months, once that insider stuff has completed. Now, this here would lead to, if this is to happen, this would lead to a head and shoulder pattern. But I am considering the volume stepping in here as well. So there's no entire gauge of what the market is going to do. But right now, you have to consider this here is the key level where price is being bid. Because look at the wick, came back down, and now you're seeing buyers step in here again. It's a very difficult chart to trade because you are literally at the top of this rising wedge on all of it, and I don't like it even to go long. Look at the weekly chart, look at the rejection on IWM, and it got bid up again on the weekly. So the market is so artificially held up right now. Like the government is just pumping the market. Every time the market pulls back a little bit, they pump the market again. And you're not getting a healthy pullback. So you've created a higher low here, and you can continue to move to the upside. I'm having a very difficult time trusting the move because you're at the top of a rising wedge. And the only way to go is to break out of this rising wedge and keep pumping to the upside, which is possible. But if you look at the monthly chart, it's so overvalued. Like everything is currently trading so hot and it's overvalued at the moment, which is what I don't like. And look at the monthly chart, the volume over here, distribution, and look at the decreasing volume on the monthly chart in IWM, currently being decreased over and over. So how high this is going to go until we got a massive pullback, I don't know. I have no idea. But key takeaway, don't short the market while it's at this level over here. It's the demand level for SPY, demand level for QQQ, and right here, this is support for IWM. And you're currently breaking resistance today, which means you're continuing to break to the upside. The stocks that I currently like are Amazon. Amazon did a, let me remove this. Okay. Amazon did a wave 1, 2, 3, 4, and 5 wave. And it had an A, B, C pullback, came back and retest the band right over here. So Amazon had a pretty healthy pullback. The other place Amazon could pull back to is filling this gap at the bottom here. So I have this blue box here because Amazon had a pretty nice pullback and it has completed a ABC move to the downside. And Amazon is one of them I'm looking to go long. Hoping the entire market is going to continue to the upside. If not, you're going to see a move like this that comes back down and fill this gap right over here. And this would be your second buying opportunity. So Amazon is one of them that I'm watching that I want to go long on. The alternative is this kind of move. Not going to call that yet, but it has had a wave 1, 2, 3, 4, 5, ABC to the downside. Pretty good level, and you're above this band. Apple is currently finding support. So the indicator I'm using, it's calling the top. You see here? The algorithm, I'm currently working on the algorithm to continue to be more accurate because it missed this one here. It's missing a few bottoms and tops. But it's getting better. It's called the top here for Apple as well. And it's telling you you're currently in a bear sequence, how strong the bear sequence is. So for Apple, you're finding support on the EMA cloud. And you're at a key level here for Apple. Now, what I would have liked to see in Apple is this move right here. this is the move I would like to see in Apple, is because you're going to be buying at a better discount between that zero point 0.5 and a 618 retracement. On this retracement here for a wave 2, it's not a very good retracement, but you're at a good level. But looking at the volume as well, not pretty good volume on the upside. So I'm still not entirely trusting a lot of stuff with Apple here. So I'm looking at Apple, but right now I'm having a difficult time. And if Apple is going to pull back like this, it's very likely the market could pull back like that as well. So that is what I'm currently looking at. Google, I like Google. Google has completed this move. The alternative, and pretty nice volume here in Google. And I think Google is one of them where you could probably go long. And the alternative is for Google. Let me scroll back so you can see what the alternative. So these are my watch list of what I'm looking to accumulate in my long-term portfolio. So Google is currently correcting because you've had a wave 1, 2, 3, 4, 5 wave move to the upside. And this pullback has given you a, if you, okay, so you do have a gap. Let me just make sure you know that. There's a gap here. And I would have preferred to see this move here in Google, where you come back and you fill this gap at the bottom here. That would have been a better wave 2 pullback. But nevertheless, Google is where it's supposed to be. Now, whenever a stock has a 1, 2, 3, 4, 5 wave move to the downside, I like to be cautious because this entire move here is not an A, B, C. It's mostly a 1, 2, 3, 4, 5. And whenever there's a 5 wave move to the downside, an impulse move to the downside, that tends to form a wave A. And if that's a wave A, then it's very likely you're going to have a wave B and then a wave C. And you're going to see a, B, C wave to the upside. And you're going to see another 1, 2, 3, 4, 5 wave move to the downside. That's how the market tends to move. So this is something you could see for Google. But looking at the VPA alone, I kind of like it. So you would have to take a risk if you're looking to accumulate long term. But right now, every single stock in the market, most of them, especially the Max 7, they're massively overvalued. They're overvalued with SPY, QQQ, and IWM. And the whole market is overvalued that at some point you're going to have, I strongly believe you're going to have a 2008 recession. The valuation cannot be like this. You're looking at valuation on a PE, looking at PE ratios and so forth, massively overvalued. And our generation right now is looking to buy for retirement. It's horrible because you cannot buy anything at a proper value because nothing is trading at a proper value. So here's where Google, I like Google. The alternative here in Google is that you see price move up here and pull back and come back here. This is the alternative. So if you will never be able to buy the exact bottom, so you have to have a trade plan and decide, okay, I'm going to buy here. If we get another drop, here's where I'm going to buy again. You need to have that kind of plan. So Amazon and Google are two of them I'm looking at the moment. So let me look at the other one. So I kind of like NVIDIA. NVIDIA has pretty much completed its this move here. And the volume is starting to pick up. So you had an ABC, WXY. So NVIDIA has completed its move. And the indicator on the 2 hours is calling sort of the bottom here. That today was whenever you see this printed on the chart, that means expect to see a move up. And that's what NVIDIA, give me a second, guys. Yeah, sorry. This is where you tend to see some upside move. So you can continue to see, like here, it printed one. You have a slight pullback and continue to move to the upside. And it's very much possible. You can see this one here printed, but yet you continue to see more downside. So the alternative for NVIDIA, so the market is giving some decent opportunity to buy, is to reject and come down lower over here. That's the alternative you can see for NVIDIA. But you do have a B, and C wave to the downside, you have a WXY, which means the correction is complete for NVIDIA. Theoretically speaking, this correction is completely over for NVIDIA. So, but it's still trading below a key level here, and it's trading below the band, which means you have to be careful because you continue to see rejection. On the 4 hours, so the volume is starting to pick up. Let me see. So now you're breaking below the band over here on the 4 hours, which is why I am still cautious, because you could get rejected on this band and continue to move to the downside. So it's like I would want to wait a little bit and see if you get this kind of move and come back and retest and move to the upside. This would be a safer and more conservative bet to go long on NVIDIA. Nobody knows when the market is going to bottom. Nobody knows anything at all. Give me a second. Yeah, so NVIDIA is one I'm watching. So these are all tickers. Amazon, Google, NVIDIA, add them to your watch list, especially if you're looking to do adding long-term investment, because the goal is not to be a trader forever. The goal is trade, make your money, buy and hold pretty good companies, and let compound interest do it work. That's how you create wealth long-term, not by day trading all the time. I'm going to look at coin in a bit. Now, for Tesla, Tesla's a pretty interesting one because you have SpaceX IPOing tomorrow. Now, personally speaking, I think SpaceX is going to do well tomorrow because there's just so much demand. But I'm not looking to go long SpaceX yet, because if you look at historically speaking, a lot of the company that has IPO, after some time, they have started dropping over the next 6 months or so. So if you're looking to buy, you want to wait for that pullback. Now, there's two things which I talked about. Tesla is either correcting this move here, because this move that you see over here, this was the pivot low, April 7th, 2025 pivot low, and Tesla has corrected that pivot low, which was over here. Let me see if I can find it. Tesla has corrected this pivot low from here and here. This was the wave 2 pullback that corrects this low at the bottom here. So you got that. So now what Tesla is doing, this was the first upside, and Tesla is now correcting this pivot low from the bottom here. So you're correcting this pivot low right over here now. And that is that correction for more upside. That's the bullish case scenario, where you come here and you correct this pivot low. You've pretty much, let me go to 4-hour chart. You've had, from this pivot low at the bottom here, you've had an A, B, and you've had your C wave. C wave tends to come anywhere between fib extension 1 and fib extension 1.618. So you had that extension already. And within your C wave, your ABC, lots of times you will see a 5-wave move to the downside in a C wave. Let's see if we find it. 1, 2, 3, 4, 5. Yes. So because you had a 5-wave move to the downside in a C wave, many times C waves give you a 5-wave move to the downside. It means that wave move has pretty much been completed on an Elliott wave perspective. So Tesla has pretty much completed its move. That's the bullish case scenario, that if you're looking to go long Tesla or TSLL, this is where you go long Tesla, somewhere within this range over here. Now, the bearish case scenario is that Tesla has not completed the retracement or the correction for April 7, 2025. And this entire move that you see here was a wave A. And you're now experiencing a wave B to the downside. This is a bearish case scenario where Tesla come back and retest this level from over here. This is the bearish case scenario. Nobody knows what Tesla will do. Nobody knows. But currently, Tesla, we are considering Tesla being a bullish sequence. Unless Tesla breaks 337, it invalidates the bullish case scenario. So nobody knows exactly what Tesla will do. But Tesla's one of them. I'm looking to go long. I want to go long Tesla or TSLL. It's just one of them. I have to make a decision what I want to do. But we have SpaceX coming out tomorrow, which is going to impact Tesla's price action going into tomorrow. And if Tesla has bottomed, we're going to see a huge impulse move on Tesla, which is the one I just put here. You're going to see probably a 30% impulse move on Tesla. And where would the move happen for Tesla? Where would the target be? To find a target, you go to your fib retracement tool right over here. You look for the top over here where this is completed, the top. You start here, come all the way to the bottom of this move, this retracement, and it will be anywhere between extension 1 and 1.618. And you'll have a 5-wave move to the upside, like this, right over here, which pretty crazy because this move come right to the top here again, right here. So nobody knows exactly. Oh, my charts is so messy right now. Damn. So nobody knows exactly what's going to happen. But one of the things I'm gauging is that Trump is always going to speak, and we don't know what Trump is going to say. And he will impact the overall market, bullish or bearish. He's going to impact the overall market. So the market is going to be very news-driven. But tomorrow is going to be a crazy day, and it's going to impact Tesla because of SpaceX. But I think SpaceX is going to pump. And if SpaceX pump, there's two scenarios that could happen with Tesla. Money's going to come out of Tesla to buy SpaceX, or they're going to pump Tesla along with SpaceX. That's the only two scenarios I see happening with SpaceX and Tesla together. If you're somebody that's looking to buy TSLL or TSLA and you don't want to buy it right now because you're not sure, the best way of doing this is if you have money, you do what you call cash secured puts. Not sure if you guys know what cash secured puts are. And your cash secure puts, you would probably do a strike price of like 355 or 350 or 352 or something, that if price drops, those are going to get called and you have to buy it. But you need to have money to buy those. That's the best way of doing them. Or you could buy your cash secured puts and you collect those premium. If you want, you could also buy calls that if it moves up, you collect money for you because now you're overall bullish on the stock. You collect money from the cash, from the puts that you sold, plus from the calls. So those are option strategies that you can use, but you have to have money. Those are more complex, cash secure puts and covered calls and stuff like that, where you can do if you have shares. Somebody asked me to do, I'm going to do coin in a minute. See Microsoft in the blue box. So this is why I'm saying I think it's very likely the market has pretty much bottomed because Microsoft is in the blue box, completed its retracement. Meta has pretty much done the same thing. Meta has corrected this move right here, an indicator called the bottom of Meta. It has corrected this move in A, B, C to the downside. And within the C wave, it has done A, B, C. Sometimes you have a 1, 2, 3, 4, 5. So the alternative for Meta is to do within the C wave to do a 1, 2, 3, 4, 5 wave move to the downside. What did I just click on? I don't know what I clicked on. Anyways, yeah. But whatever the case is, a lot of indication is showing that it's very likely the market has pretty much bottom, or you have one more leg to the downside. Netflix, our target on Netflix is to fill this gap. Netflix is one I'm currently watching for accumulation. I don't know exactly what Netflix will decide to do, but you're at a trend line here, and you're currently right at this band. And if Netflix finds support here, Netflix is going to be quite a good catch after this pullback, because Netflix is currently correcting this move to the upside. So these are all on my watch list. So Netflix is correcting this move to the upside. Netflix has already pulled back to the 0.5, which is right here. So the alternative for Netflix is at an ABC. The bearish case is that Netflix is doing a WXY move to the downside. Right here. That's the bearish case scenario. So anyone who is buying Netflix, and I am looking to buy Netflix, especially the market is bullish. If I'm to buy Netflix, my stop would have to be $75, because once Netflix start going below $75, it has invalidated the bullish case scenario, and now you're in a Y wave to the downside. So the market is providing some decent opportunities that you really have to monitor. So Netflix is one of them I'm looking at. That's why this here, I want to see the gap get filled on Netflix. And if this gap get filled on Netflix and I see that buyers have really stepped in, pushed that volume up, I want to see that volume push. I want to see the buyers stepped in here. It could be, you could see a pretty decent push to the upside on Netflix where this has bottomed. This was the entire macro correction. And this move here is just correcting this move. Now, that's what I would be looking for. So I'm watching Netflix as well. Hood. I like Hood. I'm currently long Hood. What I like about Hood is that Hood has done a 1, 2, 3, 4, 5, and now is correcting. That is why Elliott Wave is important. Elliott Wave helps you to gauge when the market is going to correct and which wave you're in. If you're in a wave 3, the saying goes, never short a wave 3, buy pullback in a wave 3. So you're buying the pullback instead of shorting the wave 3 pullback. And wave 3 is the move you actually want to catch, because that's usually the longest move. Let's see, 1, 2, 3, 4, 5. Okay. So now you on Hood, you had it finished the 5 wave. You have wave 1, and my indicator called over here. It called a sell over here, or it tell you to be careful because it's picking up some divergence in prices. It means some things does not make sense, and you can see price continue to drop lower. So it helps me to gauge what's happening. So you had a wave A, B, and C to the downside, and within this wave A, you had a wave A, B, C. So if anyone is studying Elliott Wave on any of my courses, you understand how Elliott Wave works. Within each wave, there's a subwave. And now when wave C, you had a wave 1, 2, 3, 4, 5. That has completed the sequence of correction according to Elliott Wave. And if you would have known this, this was the bottom for Robinhood. If I am currently in log chart, it has completed the bottom there. The alternative for Robinhood, there's always an alternative, is that you continue to reject this band because it could get dangerous. This band could be pretty dangerous when price is currently trading below it. You could see rejection that is massive. But I am long, and the reason I am long is because this pattern, I recognize this pattern as an accumulation pattern, because you're retesting a key level over here. And I'm looking at the volume price analysis. The volume on the buying side, it's looking better than the selling side. You're seeing increased volume on buying, decreased volume on selling. And that's an accumulation. That's how you read the volume price analysis. And I think it's very likely you could see a breakout on Robinhood right now. And you have a wave 1, 2, and where would that breakout be? Let me see, 1, 2. And if you get a breakout on Robinhood, it's going to be 1, 2, somewhere here, 3, 4, 5. So you can see a break on a Robinhood. Does something like this. Maybe come back, retest this level, and push up here to 100 and something dollars. That's what I would. I think you could see something like this if there's a break on a Robinhood. So I kind of like Hood right now. We just need follow through. I'm long Robinhood at the moment. I think I long Robinhood at $80. So I didn't catch the entire bottom of Hood. And what I like on Robinhood here is that you see the increased volume at the bottom here trying to break and push to the downside, but sellers were unable to break this level to push the downside. What that is telling me is that you had massive selling, but no continuation to the downside. When that is happening, it's saying there is a buyer that is sitting there at this bottom that is accumulating all those sell orders, and that was bullish. And now that you see that, the bottom here, whenever you see there's big selling happening at a support level and price is unable to break that support level, there is a buyer sitting there and it's probably absorbing all that selling on a volume price analysis, and you could expect price to move up. And the buyers really step in here. You have some pullback, lower volume, and then you're having that buyer step in. So the only key level here left now is for Robinhood to break these area and these gaps. I want to see a break above $100, and this should send it off. Anybody's looking for AMC? I don't know how else to say this. The chart, the indicator has flipped bullish completely. And the one thing I want you to look at right now, so I've been charting AMC for some time, and anybody who knows, I've called the bottom on AMC, but I missed it by pennies, pretty much. And I've called the upside move on AMC as well. While I know a few other people who's charging you like maybe $250 for your Discord with their 100 plus $100 million hedge fund algorithms, quote, quote. Yeah. Anyways, hopefully you guys are not paying for that. I'm not calling names. But anyways, remove that. As simple as this. This indicator, it tracks institutional buying and selling. It tracks institutional regime using statistical models. That's how I'm building it. So it helps me to track how institutions are tracking the market. Institution does not trade the market the way we do. They trade the market based on regime, based on the state the market is in. When the market state or regime has flipped bullish, institutions go long. When the state has or the regime has flipped bearish, institutions are short the market. That's how they trade, based on statistical models that tell them what regime you're in. They trade based on regime or state. And that is what the model is telling you here. Now, going back to 2021, I think it is, over here. What you want to see price break above, or the first thing, you want to see price resting above the EMA cloud. This is the EMA cloud right here. You want to see price above the EMA cloud, trending to the upside, and you want to see it green. Okay, we have that right now. That is checked. The second thing that you want to see is that the EMA cloud has broken above the regime or market bias. This is called a market bias. This band I call it a market bias because it helps to tell which the market is a bullish bias or bearish bias based on the regime. Once the EMA cloud has broken above, this is a system I'm building to help our members trade the market better, so they're not trying to guess, should I go long, should I go short? You have a system that tells you what to do. Once the EMA cloud has broken above it and price is broken above it, and then they're both price, EMA cloud is sitting above the market bias and market bias has flipped green, that's your goal to go long the market. And that's when you're buying pullbacks in the market. And you have a profit target, obviously, in the market. Now, going over here, because quite interesting, because the last time this has happened, once we had that flip right over here, we had about 1,400% move to the upside. Since it broke below it, the market buys. That is why when price is trading below the market buys, you have to be careful because it may look very solid, like it wants to break to the upside, but it does not. Once this market buys is green, you got to be careful because price is going to keep getting rejected because institutions going to come in every single time and they're going to sell every single rip into this bias because this bias is telling you where institutions are selling. That is how I'm when I'm finished completing this here is version 4.9 of the indicator. Once I finish version 5, it's going to be available to all our members in the Discord. Now, what is interesting here, it's been a very long time since AMC has broken the market bias. Every time it comes up, it gets rejected. And if you look, it may peak above, like that peekaboo moment. I call it a peekaboo moment. You peak above and then you get rejected. Every time it does that, look at the EMA cloud. The EMA cloud has never made it above. It's always trading below. That is why you need all your boxes checked. Price needs to be above. Price needs to be above EMA cloud. EMA cloud needs to be above market buys. Market buys need to flip green. Once you have that, that's your go. Market's moving to the upside. The regime or state has changed. That goes for any single stock, including the entire market. Now, that has never happened. Never happened with AMC yet. Every time you peak above, you get pushed back down because none of these things had confirmed. Now, if you look at the volume price analysis from over here, there have been accumulation taking place. Look at a change in volume. Look at a change in volume behavior, especially at the bottom here. If you look carefully, look how flat the volume is. All the way here, the volume is flat. Now, look at the increase in volume at the bottom here. That's when accumulation is taking place. So AMC is currently being accumulated for, I believe, a massive markup on AMC. And my price target, long term, I'm not calling time frame, is anywhere between $38 to $42 a share. We'll see whether or not I hit my target. 75% of the times, I hit my target. If I don't hit it directly, I come very close to hitting them. And I'm giving no time frame, but I very much likely think that is where it's heading because there's some gaps there that it will close out. It's in accumulation. You look at the volume at the bottom here. That's a massive accumulation taking place with AMC. Now, AMC is currently trading above this band, so it's currently at a sell zone, a massive institutional sell zone that you want to see flip bullish. We have the first check, which I posted in the Discord today. Let me see if I could look that up for you guys. I posted this in the Discord today. It is right here on our watch list. Yeah, so this is where I posted it today. And the charts. And the first check that we have on AMC is this check here. Price must find support above the EMA cloud. We have that. What we do not have currently is price and EMA cloud must cross above market bias band, and market bias band must flip green. That's all your go signs of we're in a bullish regime. Now we have price with volume confirming. Volume is confirming the price movement. Now the reason I'm going over this in details so that you understand to apply this method on any single ticker that you're analyzing. My goal is to the people who's in my Discord, do not depend on me and do not need a Discord long term. They could go ahead and do this on their own. Stop paying people to tell you how to trade. Go do this on your own. Or how to analyze charts. Most of them are just taking your money, to be honest with you. And you could go read that stuff in a textbook. Just get an Amazon Kindle, $11 a month. You could just go read that in a textbook, the things they're teaching you. Anyways, you've had an ABC move to the downside. I've called the bottom here on AMC as well, which is the blue box. Anybody followed me, you know my blue box. Right here, target, hit target, and now you move back up. That's where was your accumulation target, ABC. You've completed a wave 1, and now wave 1, 2, and now you're in wave 3 on AMC. So this is your wave 3. How did I get wave 3? Wave 1 was here. And your wave 3 is anywhere between the 0.1 to 0.618. But I'm going to be more conservative and say this is what we're going to do. And this applied to any different charts or any different tickers that you're looking for. And if you look, AMC was currently in a downward trend. You had your spring at the bottom here. You break below channel, fake out. That's your spring. And you continue to trade back to the upside. And now you're trying to break that range that you're in. And the range that you're in is right here, the downward range. And now the volume is picking up. And you're breaking out of that range. You're trying to break above this band over here. Let's zoom out. If you zoom out, AMC is in a massive macro falling wedge. Over here, indicator was telling you sell, sell, sell. At times, every time it comes up here, indicator was telling you sell. These are all the algorithms and the indicators telling you where price and volume doesn't make sense. It's telling you to sell. It gets a lot of it wrong sometimes. So I'm still working on that. Now you're in a massive falling wedge at the bottom here. Once this wedge is broken and this key level here is taken out at $5 something, $6, the next level you're looking at to be taken is this $13. You take that, and this here is the gap I'm talking about, $36 to $37 to $42, where AMC is going to be filling that gap. And that is my price target at AMC, and I think this gap is getting filled. When it's going to happen, I don't know, but that move right there from here, that's a 1700% move, and that is why I could be wrong. That is why I'm long. I went a couple thousand shares at my accumulation range. I took a bet, followed my analysis, my plan. I went a couple thousand shares into AMC. So if AMC is to get up here, I'm based on the amount of shares that I've accumulated at an average price of around 150. My average is 150. I've been accumulating anywhere between the range of like I think 175 down to like 133. Within that range, I've been accumulating. So this move here is going to push me about I don't know, maybe $500,000 in profit if it hits there. Anywhere between $400,000 to $500,000 in profit. So I'm holding it for now, and sometimes patience in the market is very rewarding. And I think fundamentals and everything. I'm not hyping this. For those that know me, I don't do hype. I don't do YOLOs. I tell you exactly what I see in the chart. I tell you when I'm bullish, when I'm bearish, when I'm wrong. I'm wrong. I exit my position. I deleverage my position when I see something I'm wrong about. But once price and this indicator, and it's attempting to, has broken above this band over here. Let me see if I could do this. Okay. Once this band over here has broken above, and it has continued to be green, and this market bias has flipped green and price is above it, once we have all those crosses, I expect to see a squeeze. Maybe a 200-300% squeeze in AMC. That is what I expect. And what level I'll be looking for in terms of that squeeze, I would expect that squeeze to take place, and price is to take out $6, and price is to take out around $12. So I would expect to move anywhere between this range here, around $6 to $11. Take out these before you have that kind of retracement, because this is a range that we broke down in, and we're currently at the bottom. So this here's a key level because this was a range we were in. Let me see if I could remove this. Let me see if I could remove some things there for you guys. So this range we broke down, and so the method I'm analyzing here, it applies to every single stock. A lot of people don't like to spend time doing this. They want a quick way out. They want that alert. And I'm teaching you things you could apply to every different stock. Understanding range analysis with volume is such key to help you become better traders, to help you buy at a better time and sell at a better time. So now the key level here for AMC is get back above this level here, the bottom of this range that you broke. That's going to be resistance. The key level is to get back here and find support to this level and start breaking more to the upside. Anyways, that can apply to anything. Somebody wanted me to look at coin. I'm not sure if they're still in the chat. Are you still in the chat? I think they've probably left. Yeah, they've probably left. Coin, everything for coin really depends on what Bitcoin does. It's just ruled by Bitcoin. So Bitcoin is at the pretty much the bottom again. This is the scariest charts that I've seen. Massive decrease in volume, huge macro rising wedge. When this breaks, it's going to It's going back to around 14,000 when this breaks. So, yeah. Okay, key level. If you're buying coin, technically your stop should be at 138. You break 138, you're coming down to 116. That's just my 2 cents on coin. So if you're buying coin, or you're long coin, fine. You could stay long because what you can see happen, you can see price continue to push if Bitcoin is to push. If not, you're gonna come up, reject, and you're going back down. That's what I see happening for coin. Just two case. You bottomed, Bitcoin bottom. If coin has bottom, Bitcoin has to bottom. They're both they track this similarly. They both have to bottom at the same time. Any questions? Anything else you guys want to go over really fast? Any tickers that you have in mind? Put a chat or just talk to me really fast. But what I'm looking at right now, looking for Amazon. I like Amazon. I like Google. I'm looking at Nvidia at this range. I'm looking for Tesla. Those are the ones I'm looking for. I like Apple too. I just wish there was one more pullback for Apple. I currently like the market, the volume today is signaling bottom. The alternative is to see one more downside. Doesn't necessarily mean we'll have it. If you continue to move to the upside and you do a bigger pullback, then you might see that pullback happen the way it happened over here. Let me. Where is it? There. Okay. Where you continue to see higher prices. And you see this. That's an alternative. You have some sideways movement to distribute lower. I think. Robert, I just went over coin. I think you missed coin when I went over coin. So we could see this happen in market as well, where we see some distribution taking place the same way, similarly, like we did back here. So if you start to see this movement, this sideways movement, know what's happening. Know that this here, the distribution taking place, because you're starting to have that plateauing happening with the distribution top. Likewise over here, nobody knows exactly what the market is doing, but very likely you see this happen because you're at the top of the rising wedge here, and when you see no more highs being formed, then very likely that has topped the market. But right now, the VP and so forth looks pretty good in the market. So don't short the market. I don't recommend shorting, especially once price is above the 694 level on QQQ and above for SPY above this 731 level. That's where it's being bid. Now, today it tells you where buyers are stepping in. And for IWM, today's low. Right here, previous day low. That's where buyers are stepping in. So this here is going to be your support as well. Going into tomorrow, that's your level. You currently broke this resistant level, so this is no longer valid. So we're just going to move that to all-time high. Yeah, so you had a wave 1, 2, and we'll see if you're going to push the upside. You're going to start distributing. Let's say, don't know. So with I think Robert was here. Robert for coin, just going to repeat it really fast. Not sure exactly what coin is going to do, but I'm looking at the weekly chart for coin here, and this looks very distributive where it wants to distribute. Look at the volume within this range. You're seeing some more selling entering, especially here. Now, alternative is that buyer is going to step in and start pushing this price up because it's at a key level. Let me go back to the weekly chart. Every time coin come down to this level here, it's bidded, come down again, bid it, come down. You see some bidding, but now you did not do what you did here because you broke below a rising wedge, and this push up was retesting this rising wedge with resistance at 223. And let's put the indicator on. Let's see what it's telling me. And now you are starting to see EMA cloud breaking below market bias on the weekly. And this is why I'm telling you why I want to build a system, because EMA cloud has broken with price below market bias. Market bias has flipped green. Once price and EMA cloud are both red, market bias is red, you stay out of the trade unless you're shorting, and you continue to move to the downside. Price will continue to move downside. Now, coin has had a 5-wave move to the upside. Let me show you here. 1, 2, 3, 4, 5-wave. You've had that 5-wave move to the upside. This is why I like Elliott wave. It tells me how the market moves, behavioral psychology. And now you had a 1, 2. You had an A, B, and a C wave, which is right over here. Okay. ABC, ABC, and a WXY. So a WXY is when you have two ABCs move put together. That's a double correction. So coin has completed a double correction. The market moves in a 3-wave corrective move, a 7-wave corrective move, and a 11th wave corrective move. 11th wave corrective move, that's when you have a Wyckoff distribution taking place, and a lot of times that's where the move has been completed. So now, here's the alternative for coin, and it really depends on what Bitcoin does, because nobody knows what it's going to do, but I have target for Bitcoin around $48,000 or so. That's where I have things. So what you can see, coin has broken this level. It's at a support level, a huge support level, matter of fact. Twice it has bounced off this level. What makes this one different is that though it has bounced off of this level, it's creating a lower high. So what could happen next for Bitcoin, and that is why I'm cautious with coin as well. I could be wrong. You could buy it. You could retest and continue to break to the downside. And if this happens, then the same thing will happen where coin will retest the break, and you're going to get a break that drops to around 116 or so to retest this key level over here. That's what will happen with coin, to come down and retest 116, because everything right now is bearish in coin. And I'm telling you how institutions look at the market. They look at the market in regime and state, and that is how I'm building this indicator with algorithms to tell me the regime or state. And right now it's telling me the state of the market. Coin is strong bearish, 80% bearish. Overall, it's bearish. It's only the 15 minutes chart time frame is bullish in coin. Let's check the 15 minutes. Only the 15 minutes is bullish, and you don't want to trade the 15 minutes chart if you're looking to buy long term. So that's why I'm seeing in coin. Coin is one of them that if you're going long in coin, as I've said, let's use the risk to reward, how I will plan the trade. I'm looking to go long coin here. My stop is below this level here, because this is where the bottom is. This will be a break of structure. Once price crosses below, that's a break of structure, 138. And your target would be right over here. So your risk to reward on this trade would be two risk to reward. That's how you plan this trade, because a profit target would be right at the market bias band, and right where the resistance is, because you can see rejection there again. If you see rejection there again, what you're looking for is price to make a higher low. because you want to see higher low. Right now, price has made a higher low, but it could be just retesting this break to continue to break to the downside even further if Bitcoin does the same thing as well. Nobody knows. That's what you buy. You have a stop loss. If your trade is invalidated, then you exit at a loss. Not sure if that makes sense. Anything else? AMD. So, I'm not sure if Willie is still here. Willie, yeah, you're still here. Connor. Okay, for AMD. AMD had a reaccumulation, which is over here. This was a reaccumulation. I want to show you something. I use volume profile as well. And volume profile is important. Go back to the daily chart. Here you go. Look at the volume. Now I have another volume profile that I use. That shows the buying and selling. See here. This one here was introduced to me by Mr. Amazonian, who's in the chat on the call. Mr. Amazonian, he's one of our, I would say, analysts in Discord. Smart dude. Knows his chart really well. So it shows you, look at the accumulation here in AMD. So if you're looking at AMD. So what we're going to do, this was a previous all-time high. I'm going to flip this to red just to show you something, how you would trade this. Or matter of fact, let me just move back. I want you guys to understand range analysis. Go over here. Right across here. So get used to doing this and you're going to become better at trading. You're going to become better analyzing charts. Right here, maybe. That's your range that it was in. There was a gap at the bottom here. I was looking for this gap to get filled. The gap did not get filled. Just for transparency, I missed AMD. And the reason I missed AMD is because I was looking at this gap to get filled right at the bottom here. I was looking, my long entry was literally right at the bottom here. And it came so close and I did not get filled on this. But sometimes it happens. It's a big one I missed. But anyways, this was your range analysis right here, and price broke the range. Look at the volume on the profile. Lots of accumulation taking place. It is telling you what institutions are doing. Institutions are mostly accumulating this stock, and you're seeing the green, you're seeing the red. To the left, that's the what do I want to call it? What's dominating? The buying is dominating. That's on the left. This is dominating the charts. If you see this flip and you see the red, mostly over at the top here is telling you the selling is dominating the buying. And it broke to the upside. Now, in terms of Elliott wave forecast, let's remove that. Let's remove that. You've had a wave 1. Let me do this here because you have to understand. Super cycle. So in terms of a super cycle on AMD, you've had a wave. This has completed an entire wave structure. So I start from here. I like to use log charts as well. But this has completed one. So I'm going to start this discount from over here because that has completed a cycle. So this was a new cycle. So now you had a wave 1, a 2, and your wave 2 was, let me see, let me move. Okay, I'm getting confused with all of these. Let me just remove them because I can't see which one I'm talking about. Okay, and now you're in a wave 3 for AMD. So your wave 3 could be, this could have been your wave 3 actually, right over here. But within wave 3, you had a wave, I'm gonna just remove this one for now again so I can show you, because within each wave, there's a subwave. So you have to understand the methods of analyzing based on the subwaves as well. So you have a subwave, which is this one here. So within wave 3, you have wave 1, 2. You're in that wave 3, and you're having that wave 4 pullback, and that wave 4 could have been this move right here, which has completed wave 4. And this would have ended wave 3. And this would have been a wave 4. And this would have been a wave 5, pushed to the upside, like this. Now, let's go to daily chart. So I'm counting a wave, in wave 3, 1, 2, 3, 4. 5 wave move to the upside. And within the wave 5, I'll count 1, 2, 3, 4, 5 wave. So everything is aligning. So whether or not the pullback has been complete in AMD, I don't know. But me personally, I would not be chasing AMD. AMD can move higher, but I would not be chasing AMD. I would be careful with AMD. AMD has not completed. Maybe it has. Maybe it's a very short wave C, and it has. I don't know. But AMD is currently expensive, and it's not one where I would be chasing. I would be cautious with AMD. But assuming this here is a wave 4, then you'll be seeing a wave 5 soon on AMD, the upside. Now, if I turn this off and I just look at my indicator, I turn all the drawing off and I just look at it from a indicator perspective, see what it says. It's currently in a bullish state still, but it's developing some bearish thesis. So AMD is so extended. It's insane how extended it is. Okay, drop to sell here, drop to sell here. You had a pullback. So whenever you see these euphoria, it just means expect a pullback. We could see a pullback. It could be a shallow pullback. It could be a deep pullback. Nobody knows. But now what you're looking at here, you see some like highlights at the back, at the back of these candles. This highlight looks at historical and tell you where price is extended, and you could see a pullback. Like we had them here, over here. The algorithm looks at where price is extended. So once we had them here, you had a 51% pullback. So today's pullback looks shallow when you look at the entire bigger picture, but this was a 51% pullback. That's a huge pullback. So you pull back, you continue to stay above market bias. So you're pretty much buying the dips. So not saying you're going to have that kind of pullback, but can you imagine having a 51% pullback? That would be sending price. My target for AMD, to be honest with you, where I would be looking to buy AMD. I'm not looking to buy AMD now, but looking at this chart here in AMD, I can certainly see another breakout coming. I could see a breakout that take place. If you break out here, I could see price continuing to break to the upside. If you break this line. So volume has stepped in today a little bit, so I could see a breakout. But it's pretty overvalued. The price is very far away from market bias as well. Look at its extension. So at some point, it's going to come back down. And where I will be looking to buy AMD, I think I posted it somewhere in the Discord. I can't remember. Is if we get a pullback to close this gap here at 360. Anywhere between 360 to $300 area. But now it's not the time for me to chase this. I'm not going to be chasing it, even if it's going to $1,000 a share. Don't care to. Anyways, I think I went through everything already. Anybody have any questions before I go? That's pretty much it in the overall market that I have to cover. All right, guys. So enjoy the rest of your day. Um, that's all the entire market that I want to cover. The market is looking like the dips are being bought, and we want to continue to make um, higher highs, or we want to move up, but you got to be cautious because the overall market is trading at the top of a rising wedge, and you would have to break that to move to the upside. If not, you're going to smack right back down. So bullish case scenario, you're breaking more to the upside, you're already at the top here, or you come back down here. You continue to move sideways until you break down. All right. Again, nobody knows. That's why you have to have scenarios, and this is what I'm currently seeing. But I'm seeing some buying stepping in today, where the market continued to move to the upside. So be careful. Don't short while you're here. That's not where you short. That's where buyers are stepping in. Same thing with SPY. Buyers are stepping in here. Same thing with IWM. Buyers are stepping in here. Know your key levels. Okay. All right. Have a wonderful day. Take care, and we will talk later.